So we continue to see a lot of great growth across our software business. We have over $600 million of SaaS revenue today and $1.83 billion of annualized recurring revenues, which SaaS is part of that. And so that part of our business, which it represents about more than half of our company, really is doing extremely nicely. And we see long-term opportunity for growth there. And then our index business continues to do extremely well, and that's outside of the ARR.
Right.
And then we also have trading. Trading represents about 30% of our overall revenue today.
What do you want the SaaS business to ultimately be in terms of, and this goes to the whole issue, I think there's a whole investor group out there that would love the stock to get re-rated even higher as a full-on SaaS business, but whether you can actually capture that kind of rating.
Yeah, well, we have some SaaS native businesses across the franchise. Our anti-financial crime business is essentially entirely SaaS. The workflows and analytics to the buy side are SaaS businesses. And then as we look at our market tech business, where we provide technology to about 130 other exchanges around the world, we've been moving them onto our next-gen system, which can be delivered SaaS and in the cloud. So all of our new clients that we're signing up in that business are getting SaaS-delivered marketplace services. So we see it as really a long-term trend that really continues to grow as a part of our business. And we think it's going to become, over time, obviously the growth characteristics of that are predictable. That we definitely are really, really proud of where we're leaning in. And so we see that as being a growing part of our business.
Can we talk about Bitcoin for a second? So we saw this new product, this ETF futures product. How are you thinking about crypto? What do you think that says, and what do you think it says about the way regulators are now thinking about crypto?
Yeah, I think that we have to recognize that we're still in the first generation of what the blockchain can do and what crypto is and can do. And so it's an early innovation. And for Nasdaq, we actually have been leaning into that as well. So we provide the technology to almost 10 crypto exchanges today in terms of trading and surveillance. We actually have a crypto index ourselves, and we've launched an investable product outside the U.S., and it has about $600 million of assets under management in it. And then, of course, in our listings business, we've had Coinbase go public on Nasdaq, and we will see other ETFs go public.
But do you think this is the escape velocity moment? Do you think there's a point at which, even if regulators wanted to stop it, they can't? There's sort of an Uber aspect to this, meaning if you grow everywhere in the country before regulators can get to you, at some point they have to say, I can't stop you, I just have to deal with it.
I think regulators are acknowledging already here in the U.S. that this is something where they want to find a way to make sure investors are protected, but you're not seeing them trying to stop it. In fact, I think that this action by the SEC is showing that they're trying to find a responsible way to make these types of assets available to investors, but they want to do it off of the regulated exchanges. So the CME is a regulated exchange. They are the provider of the futures, and then the ETF is based on those futures. So I believe that in general, the U.S., they're starting to look at how can we create a framework that allows this technology and the cryptocurrencies themselves to continue to evolve, as opposed to trying to say that this is something that they should stop.